This is the Asia Trade. I'm Paul Allen in Sydney, where the markets just opened. The top stories this hour. A broadly positive lead-in for Asia as US stocks climb ahead of rate calls from the Fed and other central banks. The Nasdaq 100 and Bitcoin both notching fresh record highs. US President-elect Donald Trump announcing plans for a $100 billion investment from SoftBank, while also appearing to soften his stance on the looming TikTok ban. Plus, the shock resignation of Canada's finance minister rattles the Trudeau government, exposing division on how to deal with Trump's tariff threats. All right, it was a very good day for US markets. We had the S&P higher, just ahead of the Fed's decision. Of course, we are expecting a 25 basis point cut there, although some of the market describing this as a hawkish cut. We had the Nasdaq closing at a record. We have MicroStrategy included in the index as well, and that helped propel Bitcoin higher as well, topping $107,000. MicroStrategy, of course, offers a range of instruments that offer exposure to Bitcoin. Broadcom also performing well, two-day gain now taking that higher by 38%. So we've got Nasdaq futures shaping up like this, kind of flat at the moment. S&P futures also just ever so slightly slower. Take a look at the crude price there. That's been softening. Oil slipping on weak China demand. Refining in China has dipped to its lowest in 5 months. And coincidentally, it's also 5 months since the sales of EVs outstripped the sales of internal combustion engines in China as well for the first time. Bit of a catalyst for oil, though, helping support prices slightly. The EU has sanctioned another 52 tankers that ship Russian crude, so that's offered a little bit of support to crude prices there. Let's take a look at how we are tracking in Asia. Of course, we have just opened for trade here in Australia, so in the early going, we've got the ASX also looking kind of flat, although we do have that staggered open there, so let's check back in later. We'll have consumer confidence numbers for Australia coming out a little bit later as well. Take a look at Nikkei futures. Also pretty quiet ahead of the Bank of Japan decision. We will be watching SoftBank, of course, at the open. As we mentioned there, SoftBank's going to invest $100 billion in the United States over the next 4 years. That announcement coming after Masayoshi Son met incoming President Donald Trump at Mar-a-Lago. So 100,000 jobs planned to be created there to focus on AI and related infrastructure. So SoftBank shares in focus at the open. The yen weakening ahead of these two crucial central bank decisions from the Fed and the BOJ at 154.16. And that's our question of the day. In fact, is the yen going to reach 170 or 140 first? Maybe we can get into that a little bit with our next guest in a while. Meanwhile, Bloomberg Opinion columnist Bill Dudley sees the Fed continuing to cut rates into next year. We asked the former New York Fed president what it would take for the US central bank to hit pause on its easing cycle.
Expectation is that they will continue to do rate cuts in 2025. And I think the dot plot will show 2 or 3 rate cuts in 2025. But to your question, what would cause them to not just pause, but to stop? That'd be an economy that continues to do better than expected, inflation that's sticky, and the Fed revising up their estimate of what a neutral interest rate is.
Well, let's bring in Deborah Cunningham, Global Liquidity Markets CIO at Federated Hermes. Deborah, thank you so much for joining us today. I just want to start off with that question, if we can. I mean, a Fed cut of 25 basis points this week pretty much baked in, but a lot of uncertainty around 2025. What are the factors that you're looking at, and do you think it's likely we will see a pause or a slower pace of cuts here on out?
I certainly think we will see a slower pace of cuts. Our expectation, about 2.5, 3 months ago was that we would see 4 cuts in 2025. And our expectation is maybe it's an every other meeting cut, and maybe it ends at mid-year or the third quarter and we get 2 or 3 cuts in 2025. So ultimately, the Fed's dot plot, I think, should show something that raises the terminal rate even further. In their last dot plot, it was raised up to 2.9%. I would expect to be into the low threes, 3.2, 3.25, somewhere in that neighborhood, for the information that we receive on Wednesday from them.
Well, if we do get easing, you're still optimistic, or not as much easing as expected. I know you're still optimistic about a very good year ahead for cash managers, money markets as well. Why do you feel that way?
Well, certainly the consumer is strong. The consumer has been able to benefit despite higher inflation, despite higher goods and services. There's strong wage growth, strong employment, and that has benefited the consumer. Where the consumer has also benefited, and it seems kind of counterintuitive when you think about it, but in the context of higher interest rates, for those who are saving, or even those who are, putting their cash for into short-term use, what the regional bank problems in March of 2023 in the U.S. did for the consumer in the U.S. essentially was cause them to look at where their cash was. And what they were seeing is they were still in deposit products in many instances that were in a zero rate environment, with a zero handle, despite the fact that the market at that point was in the 3% going to the 4% and ultimately 5%. So the consumer, with the strength from an economic perspective and the knowledge that they did not need to receive a zero handle interest rate on their short-term savings, essentially started pouring cash into money market funds. And then come mid-2024, when the expectation was for the Fed to begin to start easing, and then September 2024, when they actually cut rates by 50 basis points, the institutional cash manager started to kick in from a flow standpoint. So when we're talking about short-term interest rates that are 5%, 4%, 3%, and not 2%, 1%, 0%, it's a very healthy environment that it creates for cash managers, both from the individual household side to the institutional corporate side. And that's where the flows have been, have come from in 2024. And I would expect to continue to see in 2025, especially if the Fed shows, as we think that they will, that interest rates are going to end up somewhere that's higher than what had initially been anticipated.
Yeah, we do seem to be heading into an era of unpredictability in 2025. I mean, for example, the trade environment, what the tariff landscape might look like, it's all still very much unknown. How are you planning and hedging around what might happen?
Well, certainly, there's strategies such as barbell strategies, which, allow you to get the best of the front end and the best of the long end and not buy too much in the belly of the curve. That we think is beneficial in this current rate environment. We also look at, maintaining a weighted average life using utilization of floating rate securities. So again, as a hedge against what our positions might be from an expectation standpoint on the longer end of the curve. So there's strategies that make sense. And ultimately, I think with continued positive flows, it makes every day a decision with cash flow and investments to be made that have an important place and provide an important return component to the overall portfolio. So that's the beauty of the dynamics of a mutual fund, a money market fund, a pooled vehicle, is that it's individual shareholder flows on a daily basis that are invested in the market that help create a product that provides market, if not slightly better returns with very, very low risk.
What are your expectations around the dollar in 2025? Because its strength does seem rather enduring and also somewhat counterintuitive as the Fed prepares to ease, the Bank of Japan prepares to tighten. That's our question of the day today, which I mentioned a little bit earlier. Is the yen going to reach 170 or 140 first? What are your expectations in terms of foreign exchange?
Well, certainly direction of rates is important. So you're right. The U.S. is going to be easing. Japan is going to be increasing. But the overall level of rates is important as well. And even with the expectation of the Fed easing, we're looking at a terminal rate that's probably, like I said, 320, 325, somewhere in that neighborhood, at least as predicted by this most likely set of dot plots that comes out on Wednesday from the Fed. Where now compare that to the overall level of rates in Japan, where where they are in fact increasing, likely to stay on hold this week, but likely increasing in 2025. But with the expectation that that increase is off of 25 basis points, maybe moving as high as 50 basis points, but nowhere near where the overall Fed's even contemplated lowest level of interest rates would be at this point. So I think that's an important consideration in the the currency debate, is not just the direction of change of interest rates, but rather the level where they are at this point.
So tell us, with all of this in mind, where are you looking to put money to work in 2025? What are your favorite opportunities?
Well, it's interesting. We've got Treasury clearing that's happening, so there's a lot of regulatory change and work that needs to be done. On the asset-backed side, we think there's a lot of opportunity with consumer-backed receivables. We think the consumer remains a strength and a driving force in the world economy, not just the U.S., but in Europe and in Asia as well. Certainly with growth that we're seeing and expecting in China and Japan being modest but picking up, we see it again being driven by the consumer. And when you're looking at that consumer, the strength continues to be, pretty positive, driving the world economy in a positive fashion. So ultimately, when we look at asset-backed securities that are the credit comes from the underlying receivables of the consumer, we think those are extremely strong. We like, overall, anything that really has to do with the consumer side. There's certain types of pharmaceuticals that we think make a whole lot of sense. We have been looking at, sort of the tech companies again. Their valuation levels are higher than we would like them to be, certainly on the equity side. But we still see, from an earnings perspective, a lot of durable growth in those earnings expectations, and some diversification that comes from some of the traditional tech names as well. And we think that will continue to fuel those, maybe not at the same pace as they've been growing and been increasing from a value standpoint. But we still think there is, a place for them in a lot of portfolios.
Deborah, before we let you go, just want to point out Bitcoin, fresh record. This is a polarizing asset. Is that one for you?
Probably not at this point. It is something that we think, the global digitized asset world makes a whole lot of sense. It will be part of our processing going forward certainly in the next 10 years, but I think in the next 10 months. But we're not quite ready from an investment standpoint yet to jump in with both feet.
All right, Deborah Cunningham, CIO, Global Liquidity Market at Federated Hermes. Thank you so much for joining us. Coming up on the Age of Trade, with the yen weakening once more, we're going to discuss the impact on tourism with IHG Hotels. And following an arson attack on a synagogue, we discuss whether Australia has an anti-Semitism problem with the Robert Menzies Institute. Much more ahead. This is Bloomberg.
Today, I'm thrilled to announce that SoftBank will be investing $100 billion in America, creating 100,000 American jobs at a minimum. And he's doing this because he feels very optimistic about our country since the election.
My confidence level to the economy of the United States has tremendously increased with his victory. So because of that, I'm now excited to commit this $100 billion and 100,000 jobs into the United States.
U.S. President-elect Donald Trump there, speaking at an event alongside Masayoshi Son, the SoftBank CEO. So for more on SoftBank's investment pledge, let's bring in Bloomberg TV's political news director, Jody Schneider. So, Jody, what else did President-elect Trump say alongside the SoftBank CEO?
Yeah, so they made this pledge that it would be $100 billion in investment and create as many as 100,000 jobs. Often these pledges come out and it's a little bit unclear how much of this is new money. And we have that same question here, whether this is something the company has said that they are going to invest greatly in artificial intelligence and a lot of it in the U.S. So it's unclear how much of this is a new pledge, but certainly it was a big number, big numbers being floated around there, and also that it would come over the next 4 years, which of course is President-elect Trump's next term. So clearly this was him saying, we support you, we want to make investments in the U.S. With you. President Trump at the end made a joke and said, well, maybe it'll be $200 billion. And the SoftBank CEO laughed and said, well, maybe. So we'll see what this amounts to in the end. But it is part of the trend of CEOs coming to Mar-a-Lago and pledging to work with the president-elect on economic issues and, in some cases like this, making investments in the U.S.
Yeah, so a big announcement there, but what questions have resulted from this pledge from SoftBank?
Yeah, the big question is, can they afford to do this? Do they have the money, the capital to do this? An investment that they announced before the President Trump's the President-elect's last term came partly to fruition, but they were in much better shape in terms of having capital on hand then. So the question is, can they raise this? Where will this money come from? And then the other issue I mentioned, how much of this is new money, is an actual, fresh pledge, if you will, as opposed to money they were going to spend anyways in the country.
So, as you say, the SoftBank CEO, just the latest to visit Mar-a-Lago. But what did this visit spur President-elect Trump to say more broadly about business executives during this transition period?
Yeah, he's saying they're all coming to be his friend. He said last time everyone was fighting, and this time they're all coming. They want to be my friend. And they are all coming to Mar-a-Lago. We have seen, a kind of a trail of CEOs come to give him investment pledges. We've seen the likes of Mark Zuckerberg for Meta and the CEOs of technology and media companies come and say they want to spend money and invest in his inauguration effort as well. We also saw the TikTok CEO meet with the president-elect at Mar-a-Lago today. This was after Donald Trump said that he would see what he could do about this TikTok ban that's upcoming. He had earlier wanted to ban TikTok, but now he says, well, let's see what we can do about that. And presumably that was the content of that conversation. One of the things that he is worried about, as was Joe Biden before him about banning TikTok, is this is a real portal to young voters and young constituents. And he knows that the president-elect knows that if the TikTok ban went into effect, it would really hurt a way to try to reach out to younger constituents. So we'll see. There were we didn't hear anything that any promises that were made, but the fact that they met at all at Mar-a-Lago tells you something about what may happen in the future with that purported ban.
Yeah, and I believe that ban comes into effect the day before the inauguration, so it might take a little while to walk it back. But in terms of the inauguration, you mentioned a parade of CEOs coming to see the president-elect. What do we know about some of the guests for the inauguration in January?
Yeah, so, that's all starting to leak out, but we think that there will be, it will be a very business-heavy inauguration, that we expect there to be both on the dais at the actual inauguration, at the balls. We expect there to be a lot of the corporate CEOs and titans of industry that will be involved in this. As Donald Trump said, now they all want to be his friend.
All right, Bloomberg TV's political news director, Jody Schneider there. We have more ahead on the Asia trade. This is Bloomberg. The government of Canadian Prime Minister Justin Trudeau has been rocked by the sudden resignation of Finance Minister Chrystia Freeland over disagreements on how to prepare for the incoming Trump administration. Let's bring in our Canadian government reporter now, Brian Platt. Brian, disagreements, what were the nature of these disagreements?
There's a few factors here. The election of Donald Trump seems to be the thing that brought this all to the forefront. But it seems like there's been a percolating disagreement between the finance minister and the prime minister over the spending priorities of this government. And it's a stunning development, because Chrystia Freeland was not just the finance minister. She was the deputy prime minister. She was really the most powerful minister in Justin Trudeau's cabinet and a very close friend and ally of Trudeau. And she completely turned on him today in brutal fashion. Released a scathing letter, a resignation letter, that not only criticized his government, but also her resignation came on the morning of a budget update to Parliament. So it was like the worst timing possible for Trudeau. It threw his government into chaos. And it really seems to be a resignation designed to inflict as much damage as possible onto the prime minister.
What was the impact on the markets, and what's the plan for the government going forward now?
The markets did not react well when the news first came out. The thing is, the budget update had already been prepared, right? And so it was chaos, but the document itself had already been written and was eventually still published. And the new finance minister has now been named, Dominic LeBlanc, who is a very experienced minister in this government. So I think that appears to have calmed things somewhat. But there is a huge uncertainty now around whether Trudeau can continue as prime minister. And his Liberal Party caucus is meeting, it's evening here in Ottawa now. His Liberal Party caucus is meeting just a few buildings away from where I am. And even if Trudeau gets through tonight, still as prime minister, I think it's a very big question whether he can make it through the rest of the week. There's an election that will have to take place sometime next year, by October at the latest. I think now this throws everything into question, and it's very possible we could get a much earlier election than that.
Okay, so Dominic LeBlanc, the new finance minister, what does this mean in terms of policy towards the U.S.? More aggressive or more conciliatory?
Well, I think it's interesting that LeBlanc has been made finance minister, because his job until now has been primarily on border safety, which is what Donald Trump has been threatening. This whole tariff threat was that Canada has too loose of a border right now, both Canada and Mexico. He was focused on migration and fentanyl coming in. And now the guy who is in charge of border safety has been made finance minister, and really now elevated to the second most powerful position after Trudeau. And so this does seem designed to send
Canadian
a message to Trump.
Reporter Brian Platt, where we're out of time, but thanks for joining us. We have more ahead in a moment on the Asia trade. This is Bloomberg. Getting some breaking news out of Australia. It has consumer confidence numbers for the month of December, making somewhat grim reading, declining 2%. The number is at 92.8. 100 is the key number for this index. That is where there is an equal number of optimists and pessimists. So with 92.8, we've got pessimists heavily outnumbering optimists. If we dig into some of the numbers, though, it makes for a slightly more interesting reading. Consumer sentiment, not actually too bad. It's up 13% on year. Family finances versus a year ago also improving, but it's optimism about the future where things start to fall apart. Optimism around the economy 1 year in the future, cratering 9.6%, 5 years out, minus 7.9% confidence. As for purchase of a major household item, that number's still very weak at 89.2, but it is up about 5% on year, so coming off a pretty low base. But consumers overall in Australia, not a very optimistic bunch right now. Take a look at the ASX, though, performing pretty well today, and consumer staples, that sector, actually up about 1/3 of 1%, although we are on the eve of Christmas. New Zealand's Treasury, meanwhile, is set to release its half-year economic and fiscal update. Prime Minister Christopher Luxon is facing incredibly challenging economic conditions. His words. Bloomberg's Australia and New Zealand economist James McIntyre joins us now. So, James, what are the takeaways from this half-year update?
Well, one of the things that we're looking to see is how far back is the return to surplus. So the last budget update from the previous government had the surplus coming in at 2028, but the economy has deteriorated. Now, Luxon did make those comments, but you also need to acknowledge that some of the austerity, the savings, the cuts that have been put in place since the new government came to office have contributed a little bit to some of those challenging economic conditions, with fiscal policy doing monetary policy job as well of tightening those cuts, feeding into weakening the economy. So that is not a great outcome fiscally. It means that what we're seeing in the labour market, jobs sputtering and starting to slow, that's not helping those income tax receipts, and unemployment benefit recipients, they're rising, they're spiking up, and that's adding on the expenses side. So that's going to push back that return to surplus there for the government.
Now, you've been writing that CPI in New Zealand now looking well contained. What's the next move for the RBNZ?
Well, it's where everyone's expecting the RBNZ to cut. The RBNZ themselves have flagged further cuts in their November update. Where the question we think going forward for 2025 is how far will they need to cut? At the moment, the expectation from the RBNZ, they've flagged that they're only taking rates back to neutral, but with a pretty decent output gap from a second recession. We're in recession now. The GDP figures at the end of the week are likely to confirm that economy has contracted again in the September quarter. We think that the RBNZ is going to need to actually go a little bit further than what they're saying, down below neutral, possibly to as low as 2.5% next year, in order to help revive that sputtering economy there over in New Zealand.
Yeah, well, let's talk about Prime Minister Luxon's description of the economic conditions. Incredibly challenging. What's his task ahead? How does he navigate these?
Yeah, so one of the key questions is going to be how they balance their election commitments around returning the budget to surplus quicker and really reining in waste and spending, and the tax cuts that they have already delivered, making sure that we find a way as that economy begins to recover to see that economic momentum translating into better fiscal momentum. So again, that key question for the budget of when is the deficit going to flip back over to surplus? Is it 2028 or 2029? And what's the extra debt load as we get there?
All right, Bloomberg's Australia and New Zealand economist James McIntyre there. Now let's get to some more global stories that we're following. German lawmakers have voted to hold a national election in 2 months' time, backing Chancellor Olaf Scholz's plans to end his term early. Scholz called the confidence vote after he fired Finance Minister Christian Lindner, which means his coalition lost its majority in the lower house of Parliament. Now, this sets the stage for an election on February 23, 7 months earlier than scheduled. And incoming US President Trump says he'll move to fire US federal workers who don't come back to the office. Trump says he'll go to court to challenge a Biden administration labor contract that locked in remote work arrangements for thousands of employees. He calls the deal ridiculous, saying it was a gift to a union. Donald Trump also says he will look at whether to stop the looming US ban on TikTok before meeting with the platform's CEO at his Mar-a-Lago residence. Trump told reporters that he has a warm spot in his heart for the Chinese-owned video sharing app, which he says helped Republicans gain among young voters. TikTok's parent company ByteDance has now formally asked the US Supreme Court to block the ban, and that is due to come into force on January 19. Now, weeks before Donald Trump returns to the White House, China's factories are rushing to prepare for potential new tariffs. Let's bring in our China correspondent Min Min Lo in Hong Kong. So, Min Min, what are companies doing to prepare for what might be a looming trade war?
Hey, Paul. So our Bloomberg team spoke to quite a number of different companies in various sectors, and they're all preparing quite differently. Obviously, they're preparing for the worst case scenario of 60% tariffs, but they're hoping for the best. So some of these companies are investing in more R&D, hoping to build more brand resilience to survive that potential trade war. Some are opening up factories in Eastern Europe, in Vietnam, for example. Some are looking to diversify their client base. Some are also considering to open up factories in the U.S., planning for the very long term for a potential J.D. Vance presidency, even post-2028. But they said that is still something that they're quite reluctant to do. Some companies are saying it's still more efficient for them to produce in China. But of course, as I said, different sectors affected differently. If you talk to the seasonal industries like the clothing companies, they're saying they are seeing a decline in orders already because they are requiring, a couple of months of lead time before their products reach the U.S., by which time policies could change. So you're seeing orders dwindling, but then when it comes to some of the more essential industries, the more raw materials, that's seeing more sort of a front loading of shipments of exports to the U.S. at this time.
So how are companies in the less seasonal industries like the raw materials, metals industry preparing for potential tariffs?
Yeah, these are companies that would be more resilient because if you talk about metals casting, for example, China produces more than, or they produce half of the world's supply, more than the next 8 countries combined. So for a metals casting company that we spoke to, they said that they are not looking to shift production outside of China because they said it's a very energy intensive industry and they need the energy resource in China. They need the raw materials in China. And what this means is that American companies that rely on these Chinese companies for input, they're likely to be hurt by the tariffs. Those costs is likely to be passed on to U.S. consumers as well. And that really highlights some of the challenges of using these tariffs to entice Chinese companies to shift production to the U.S. And of course, when these companies try to diversify their client base to their domestic market, they're going to face thinner margins as well because of the price war that is happening in China.
All right, Bloomberg's China correspondent Min Min Lo there. Coming up next, yen weakness continues to drive Japanese tourism to new records. We'll get the industry outlook next with IHG Hotels. This is Bloomberg. All right, just getting some breaking news across the Bloomberg at the moment. We're hearing that President-elect Trump has lost his bid to have the hush money case thrown out over immunity. He was trying to get rid of that remaining legal threat before his inauguration, but the U.S. Justice Department has previously voluntarily dropped 2 unrelated federal cases as a result of the election victory. Not this one, though. The hush money conviction must be preserved, a district attorney is telling the judge in that case. All right, so President-elect Trump losing that bid to have the hush money case thrown out over presidential immunity. All right, well, we've got Japanese markets opening at the top of the hour. A number of things we're going to be watching there. Among them, SoftBank, after that announcement of a $100 billion deal to make investments in the United States, apparently creating 100,000 jobs. So we'll see how that stock reacts. Nikkei futures, meanwhile, better by about 1/3%. Take a look at the yen, though. Well, it's weakening again, 154.18, and that's despite we are anticipating easing from the Fed this week, perhaps a pause from the BOJ. Few people think we might see a cut from the BOJ, but the consensus is for the Bank of Japan to stand pat, but the yen continuing to soften. Well, Abhijay Sandilya, Managing Director for IHG Hotels and Resorts Japan and Micronesia, joins us now from Tokyo. Abhijay, thank you so much for joining us today. Obviously, that weak yen having a profound impact on tourism in Japan. I wonder if you can give us a sense of how this has been driving record tourism numbers there.
Good morning, Paul, and thank you for having me. Indeed, we've had a record year for tourism across Japan in 2024. October data was our highest monthly tourism numbers. And then year to date to October, we clocked over 30 million tourist arrivals. So very, very formidable from an inbound tourism perspective. But I'd like to add that it goes beyond the fact that the Japanese yen is weak. I mean, if you look at data between 2009 and 2019, Japanese tourism grew at a CAGR of close to 16%. And that was on the basis of some very strong fundamental plans from the Japanese government to drive tourism. So while it's certainly helping travelers spend and helping people to make that travel decision to come up to Japan or come to Japan, I think there's various very, very strong fundamentals that drive our tourism economy. And the Japanese yen and the current pricing where it stands at certainly helps that.
Due to these increased tourism numbers, what sorts of trends are you noticing in the hotel industry at the moment? Do you see more rooms being added, more capacity?
We saw a big burst of supply around the time of the Tokyo Olympics across Tokyo, Osaka, Kyoto. We're gearing up for some landmark events next year with Osaka Expo 2025, and we're still seeing some supply added there. But a lot of that supply is starting to stabilize, and we've seen the launch of our new brands. Actually, I was in Nagasaki on Friday at the opening of our new Hotel Indigo there, and we've also announced a new hotel in the Toya region of Hokkaido that will join our systems later this year, the Windsor Hotel there. So we're certainly seeing supply and advent of hotels joining our branded system, and a lot of that's driven by the strong tourism economy that's currently in play.
Yeah, you mentioned that efforts from the Japanese government to promote tourism predate the weakness that we're seeing in the currency. How much confidence does that give you that this momentum can be maintained when the yen inevitably strengthens?
Yeah, thanks, Paul. I think really that the fundamentals of the Japanese tourism economy, are very, very robust. You'd see, for example, Australia, which has grown 70% year on year in terms of arrivals, aren't necessarily linked to the cheapness of the U.S. dollar versus the yen. And I think there's such strong fundamentals across Japan in terms of infrastructure growth. We're seeing the Shinkansen's extended into Hokkaido. We're seeing the Shinkansen extended into Tottori Prefecture. We're seeing the integrated resort come to Osaka. So I think while we're seeing, Japan is the hot travel destination in 2024, I think the pie is also being expanded as many may know that the government ambition is to get to 60 million arrivals by 2030 at the top of the decade, which is close to double the numbers where we are now. So all factors on the ground, all factors from a tourism perspective, are all very, very positive. And not to forget that we've got an extremely strong domestic tourism market, on a last quarter basis. That's 150 million trips in the previous quarter, Q3, which while down on 2019 is up double digits versus spend from 2019. So all very, very positive. And I think the prognosis for next year with the World Athletics Championship in Tokyo, the Osaka Expo, we're really, really looking at a positive outlook for tourism in Japan.
Yeah, the domestic tourism story is an interesting one as well, because the flip side of a weekend, do you see more Japanese staying home to take their holidays, and what sorts of things are they doing?
Well, absolutely. We're seeing that across the estate. There's passport penetration in Japan is sub 20%. So you have an amazing backyard here in Japan with multiple UNESCO World Heritage sites. Multiple things to offer. And as our key cities start to get more expensive, it also helps promote other alternative destinations. Markets across the country. I mentioned recent openings buildings in Nagasaki, and will open a gorgeous new hotel in Sapporo. So we're seeing luxury travel go into new cities. We're seeing experiential travel going beyond the typical Kyoto, Osaka, Tokyo markets, and very much seeing our domestic consumers experiencing that. And we've seen overnight trips actually move up in terms of value to the economy 20% from 2019 numbers. So our domestic guests are equally traveling more and paying more as they travel across the country.
So a lot more international tourists coming in. Where are they from, and how much are they spending? What sorts of things are they spending on?
Yeah, so I think our continued largest markets remain our markets around us. I mean, South Korea, China continues to be our two largest source markets. But we're also seeing Japan being the #1 outbound market for many, many countries. So for the U.S., for Australia, as I said, for South Korea, and a lot of the Asian markets. Visitor spending is also up. Visitor spending year to date was cleared record numbers. And to your question on where they're spending their money, certainly they are spending it in hotel experiences. We're seeing that across our estate. We've had some of our most successful performances across our estate by Q3 here in Tokyo in particular. But they're spending it across the travel economy. We're seeing culinary tourism is a great example. In 2023, culinary tourism was close to $1 trillion global market. Japan, Tokyo has the most Michelin star restaurants in the world. So we're seeing a strong desire for people to travel, to come out here, experience luxury hotels, but experience hotels across all price points within our portfolio. But we're seeing them also go out, spend on experiences such as culinary tourism.
All right, Abhijay Sandilya, Managing Director for IHG Hotels and Resorts Japan and Micronesia. Thanks so much for joining us. And you can watch us live, and you can see our past interviews on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions we talk about. Plus, you can become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. Let's get an alert for you from South Korea. We're hearing that Korean court is asking the impeached President Yoon now for written answers to questions by December the 23rd. We understand the prosecutor plans to issue another summons for the impeached president after he didn't accept the first one. We're also going to see a meeting today between the finance minister, the Bank of Korea, and regulators as officials seek to continue to calm markets, which has actually performed rather well throughout this entire saga. But there you see the South Korea court asking impeach President Yoon for written answers to its questions by the 23rd of December, and that is according to reporting from Yonhap. Now, in the wake of the political turmoil in South Korea, the state of play in East Asia is looking rockier than ever heading into 2025. Bloomberg Opinion columnist Garode Reedy joins us now to discuss his latest column. So, Garode, giving Yoon's ouster, what's the outlook like for the trilateral friendship?
Yeah, this is, one of the things that I think has been one of Yoon's really lasting sort of policy achievements was helping to restore ties with Japan, which were on the rocks before he came into power, and then also together with Biden and with Kishida, the former Japanese prime minister, to really building a long-lasting trilateral relationship, one that was designed, I think, to outlive any of the leaders. Now, Yoon is, essentially gone. Biden is on his way out the door, and Kishida has also been replaced by Shigeru Ishiba in Japan, and I think that opens up a lot of risks to the the long-lasting trilateral relationship. We've seen already, the first impeachment motion against Yoon contained criticism for his, not just obviously for his declaring martial law, which you would think would be enough for an impeachment motion, but it also criticized his pro-Japanese policies and his his inserting of figures who are seen to be pro-Japan into the government. So should the opposition party in Korea come back into power, I would be concerned, I think, about where the trilateral relationship and the bilateral relationship is going to go, particularly as it pertains to Japan, and especially as we go into next year, which is going to be a big year in Japanese and Korean relations.
Yeah, so tell us about things from the Japanese perspective.
Yes, obviously here in Japan, I was talking about, and in the column I was talking about, Yoon's ouster, but the situation in Japan is also weaker than it has been, I think, in recent years. Shigeru Ishiba, as I mentioned, is the new prime minister. He has very little diplomatic experience. He doesn't have the experience of predecessors like Kishida, and he certainly doesn't have the experience of someone like the late Shinzo Abe. And obviously the elephant in the room here is that Donald Trump is going to be back in the White House in just a couple of weeks. How Ishiba will be able to handle that situation remains, I think, a little bit of a question mark. He hasn't had a great start to his to his first diplomatic trip, which was to the APEC summit in South America, and now he's going to have to deal with a much rockier relationship with, obviously, sort of, the closest neighbor and one of its most important partners in South Korea. This comes at the time when next year, as I'm saying, is the 60th anniversary of the normalization of relations between Japan and South Korea. It's also the 80th anniversary of the end of World War II, which will no doubt lead to there will usually be like a statement, and often it becomes a reason to drag up past historical grievances. Now the risk of that, I think, Ishiba is expecting to go to Seoul next month to meet Yoon and to continue the relationship that Yoon and Kishida had built. Obviously, that's off the table, and we might be back to scratch again.
Yep. All right. Bloomberg Opinion columnist Garode Reedy there. Let's take a quick look at the stocks we're going to be watching when trade opens in Korea and Japan shortly. SoftBank obviously firmly in focus after Donald Trump announced it's planning to invest $100 billion in the U.S. over the next 4 years. Also keep an eye on Asian crypto stocks after Bitcoin touched a fresh record high, extending its best winning run in 3 years. Market opens in Seoul and Tokyo next. This is Bloomberg. This is the Asia trade. We are counting down to Asia's major market opens. We will we'll be up and running in Tokyo in just over 30 seconds' time. We'll be keeping an eye on SoftBank shares after Masayoshi Son met with President-elect Donald Trump at Mar-a-Lago. The pair of them announcing a $100 billion investment in the United States, slated to create 100,000 jobs to do with AI and, of course, related infrastructure, including data center and energy projects as well. Keeping an eye on the situation in South Korea as well. Things seem to have calmed down a little bit there. There will be a meeting today between the Finance Minister, Bank of Korea, and regulators, as well as officials seek to continue to calm nerves in South Korea. Although that said, the Kospi's been doing okay since that December 3rd brief declaration of martial law. So here we go. We're up and running in Japan, and in the early going, better by about 1/3%. Take a look at the yen, though, continuing to be very soft, 154.10. We are expecting no move from the Bank of Japan at its meeting this week. There are a few hardy souls who think we might see some tightening. On the other end of that currency pair, the Fed's pretty much a near certainty to ease by a further 25 basis points. That said, we do have the yen continuing to weaken because even with that policy divergence, rates in the US remain substantially higher than they are in Japan. Now, it did mention SoftBank a moment ago. Let's take a look at how that is trading. The short answer is it's not because of the special quotation, that announcement between President Trump and President-elect Trump and Masayoshi Son about that $100 billion investment. It is, however, set to rise off the back of that. That agreement that will take place over the next 4 years, and as I mentioned, a plan there to create 100,000 jobs. Trump did goad Masayoshi Son ever so slightly, saying, well, maybe that 100 billion could become at 200 billion. Masayoshi Son batted that one away. Kospi a little bit softer in the early going, off by about 1/3 of 1%. We did see it slip a little bit, but it's made up a lot of the losses that we saw since that brief declaration of martial law. In terms of that, the impeached President Yoon has been told, as we mentioned a short time ago, to submit written answers to the court by December the 23rd. And we understand prosecutors are going to have another go at issuing a summons for former President Yoon after he didn't accept the first one. Let's take a look at how we're tracking here in Australia. We've been going now for a little bit over an hour, and it's a reasonably positive day on the ASX, better by about 0.5%. The dollar showing some modest gains as well. We had some rather lackluster consumer confidence numbers out for the month of December a short time ago, but overall the market performing reasonably well. Now, Bloomberg Opinion columnist Bill Dudley sees the Fed continuing to cut rates into the new year. We asked the former New York Fed president what it would take for the U.S. central bank to hit pause on its easing cycle.
Expectation is that they will continue to do rate cuts in 2025. And I think the dot plot will show 2 or 3 rate cuts in 2025. But to your question, what would cause them to not just pause, but to stop? That'd be an economy that continues to do better than expected, inflation that's sticky, and the Fed revising up their estimate of what a neutral interest rate is.
So the Fed widely expected to deliver a 1/4-point rate cut this week. Trade is also gearing up for policy decisions from other major central banks as well. With Garfield Reynolds, our Markets Live Asia coverage leader, joins us now. So, Garf, that 25 basis point cut from the Fed, pretty much nailed on, but the market seems to be viewing it as a hawkish cut. What's the market pricing after that?
Yeah, well, the market is pricing for probably just somewhere between 2 and 3 cuts in the coming year, and that's a long way back from where we were, just a few weeks ago, when the expectation was more for sort of like 4 definitely next year, maybe even more. So that is a lot of that's to do with the economic resilience that Mr. Dudley was flagging. There's also some prospect that the uncertainties about the US budget deficit, we're all fairly certain that Trump's original corporate tax cuts from 2017, that they will be extended, which is going to blow more of a hole in the budget than is the current planning. So you've got increased spending that should also help to keep the economy strong, and it puts pressure on bonds and bond yields because of that. So just that by itself is helping to keep people a bit edgy about what goes on with the rates picture next year. And then there's the question of what tariffs do, whether they actually end up being inflationary as well. So there's a lot of concern about the upside risks. There is potential that this is going to end up being less hawkish than investors might be positioning for, just because the Fed can't really deal with these sort of unknown unknowns, to bring Mr. Rumsfeld back into it, when it comes to tariffs and further tax cuts and some of the other measures that Trump has been pushing for. So if they just focus tightly on the corporate tax cut situation, the extension of those tax cuts, then that might help to lead them to be more open to 3 cuts next year, for the dot plots not to go too much higher, and for the neutral rate estimate not to shift much, because they're waiting to see what's going to come. So if that's the case, you might actually get something of a correction in the dollar. The dollar's been very strong against a lot of currencies over the last little while. So that, in many ways, is almost the risk that I see going into it, is the market has got itself so worried about the idea it's going to be a hawkish cut that if it ends up being more like a neutral cut, that is going to be seen as as dovish and set off rallies in bonds that might be a bit unexpected.
Yeah, well, let's talk a little bit about dollar strength. What are market strategists saying about its durability?
Well, yeah, it's become so strong and such a sustained move that a lot of strategists are starting to say, well, it's hard to justify it continuing, and in particular, the dollar seems to be, the ultimate Trump trade in a lot of ways, if we possibly exclude the cryptocurrency space, where almost no matter what is anticipated out of the Trump administration, the instinct is to buy the US dollar. Now, there are also market reasons for weakness in a range of currencies. We've got Canadian government turmoil overnight. We've got the Brazilian real, crashing down. We've also, though, definitely got a sense that Asia is very exposed I was looking at major currencies performance quarter to date, and Brazil's right down the bottom, but otherwise it's the biggest currencies in our region. It's the New Zealand dollar, the Australian dollar, the Japanese yen, and the Korean won. They've all come crashing down. That's partly because of concerns about what tariffs will do to Asia. Asia is seen as being most exposed, both directly by China and indirectly because there are a lot of economies that depend on exports to the US. So in that, that's part of what's been driving dollar strength. The question again is, has that gone too far? And places like the Australian dollar, for example, has been carried along, even though we don't know if the RBA is going to cut rates early next year and how rapidly it would cut rates if it does, but it's being thrown in with that basket. So that's kind of a microcosm of what's going on with the dollar. Yes, there are reasons for it to be strong, but for it to go on being this strong for this long, it is, to some extent, it's due for a correction. So if we got, a less hawkish cut than expected, you would expect to see the dollar, take it on the chin.
All right, Garfield Reynolds, who leads our Markets Live Asia coverage. Let's get to SoftBank. Shares rising after President-elect Donald Trump announced the company is planning to invest $100 billion in the US over the next 4 years.
Today, I'm thrilled to announce that SoftBank will be investing $100 billion in America, creating 100,000 American jobs at a minimum. And he's doing this because he feels very optimistic about our country since the election.
Confidence level to the economy of the United States has tremendously increased with his victory. So because of that, I'm now excited to commit this $100 billion and 100,000 jobs into the United States.
All right, well, let's get more on this story. Bringing our technology reporter Minjong Lee. Minjong, what details do we know, if any, about SoftBank's planned investment?
We know that, according to sources, the investment will probably in areas including data centers, semiconductors, and energy, and AI, of course, and related infrastructure. We don't have any more very specific details as to how will the investment be executed over the course of maybe several years and how it will be financed. But we can I think it's very likely that there could potentially be some M&A deals, and a lot of the investment will probably in the AI area because that has been very much an area of focus for SoftBank in the past couple of months and in recent quarters. So there's definitely more to come on this as it develops.
How much of this is actually new money?
All of this, I mean, based on what we know right now, all of this is supposed to be new money. But based on how they did it back in 2016, when they pledged $50 billion US, I don't think anybody actually kept account of if all of that was executed. But back then, Massa was setting up the Vision Fund, and a lot of the U.S. companies actually were invested through the Vision Fund. But this time, we don't really know, we don't have any vehicle that could potentially be the source of $100 billion. But we can make, if it's anything similar to what happened back then, there would be, we can expect some creative funding plans coming from SoftBank. It might not all be SoftBank money. So I think there should be more to come in this in terms of how the money will be financed as well.
All right, technology reporter Minjong Lee there. We have more to come on the Asia trade. Stay with us. This is Bloomberg. Germany is headed for a national election in 2 months as Chancellor Olaf Scholz rolls the dice on ending his embattled coalition government 7 months earlier than planned. News desk editor Jill Deesis joins us now for the latest. So Jill, an election now set for February 23, but there's really no guarantee that things are going to be much clearer or easier after that, right?
Yeah, that's right, Paul. I mean, this is quite a bit of a gamble on Scholz's part. We've obviously seen, other foreign leaders try to call for snap elections where this ends, fairly disastrously for them elsewhere in the world. But what Scholz is trying to do here essentially is that his big coalition has kind of fallen apart a bit. Over the last several weeks, there's been some disagreements between a lot of these aligned allied parties over funding on the war in Ukraine. We've got, a lot of concerns, pretty deep-seated about the state of the German economy and what ultimately needs to be done to fund things like infrastructure projects and such to actually get things moving again because of some of those issues here. So this has really just left Scholz in a very embattled, very difficult position here. By calling for the snap election, moving this date up, maybe there's an opportunity for him to, consolidate power there, but obviously that's incredibly uncertain here. And Paul, the one thing that I just really want to point out here is that, it's not just Germany in isolation, obviously, that we're really concerned about here in terms of all of these shifting power struggles. But when you've got, situations unfolding elsewhere, including also within the EU in France, it kind of just leads to this, a lot of these concerns about geopolitical instability, particularly leading up to January when obviously U.S. President-elect Trump comes into office, and then we'll have to kind of see how things unfold into 2025. But yes, quite a bit of uncertainty here out of Europe right now.
Yeah, well, those shockwaves have reached another G7 member as well. In Canada, we've had the Canadian Finance Minister, Chrystia Freeland, quit over disagreements relating to how to handle the incoming Trump administration. What do we know about the nature of those disagreements? And is the new Finance Minister, Dominic LeBlanc, what's the plan for him to handle this problem?
Yeah, well, I mean, Paul, that was a pretty big shocker, just earlier today. So this finance minister, was a pretty key ally of Trudeau, had kind of, been a mainstay within his administration. But it does seem like they had some kind of a significant disagreement out of, how to actually address some of these tariffs. I think, you're seeing the statement from Freeland on your screen right now talking about needing to keep fiscal powder dry, I think kind of raising some concerns about fiscal policy within Canada. Ultimately, though, this really kind of comes down to how exactly the nation responds to some of these tariff threats that just came out of Trump a couple of weeks ago, looking at, the prospect of higher tariffs on Canada because of Trump's concerns about the border, about fentanyl coming over the border, about some immigration concerns here. Obviously, again, all of this kind of leads to a lot of concerns over realignment of these nations within the G7 and how exactly they respond to incoming President Trump, who who's going to play nice, who's ultimately going to kind of foster these relationships. But it does leave Canada, in particular Trudeau, who is already in a pretty difficult spot, had been dealing with a lot of, sort of pressures, within and outside of his administration, again, kind of sets them up for, this threat of instability going into 2025.
All right, our news desk editor Jill Desis there. Well, weeks before Donald Trump returns to the White House, China's factories are rushing to prepare for potential new tariffs. Let's bring in our China correspondent now, Min Lo in Hong Kong. So, Min, what are companies doing to prepare for what could be a looming trade war?
Yeah, obviously how President Trump is going to implement those tariffs, that is a major concern for many Chinese companies right now. So we spoke to a number of company executives across different industries, and they're already impacted. If you talk to the clothing manufacturers, for example, they are seeing orders decline because this is a seasonal sector and they need a couple of months lead time for the products to be made and then sent to the U.S., by which time policies would have changed. But then in other sectors, the more essential industries, they're seeing a front loading of shipments at this time to avoid or to minimize the impact of tariffs that could kick in potentially next year. And many of these companies, they are already looking at ramping up production overseas in neighboring Vietnam, for example, or even in Eastern Europe. Some are saying they're preparing for the very long term, given the threat of universal tariffs on goods that are produced even outside of China. So they're looking at considering maybe opening up factories in the U.S. as well, although this is going to be more costly for them. But they're thinking about post-2028 as well, preparing potentially for a J.D. Vance presidency as well.
How about companies that are in less seasonal industries like raw materials, metals? How are they preparing for potential tariffs?
Yeah, these companies, they are a little bit more resilient against in the face of these tariffs. So some of these companies, a metals castings company that we spoke to, for example, they're saying they're not looking to shift production elsewhere because it is a very energy intensive industry. So they need the energy resource of China. They need the raw materials in China, and it's still more efficient for them to produce in the country. And this highlights the challenge of using these tariffs to try to entice companies to set up factories in the U.S. and to create jobs there, for example. And what this means is that it is going to shift some of the burden to U.S. consumers because it's going to hurt U.S. companies that rely on these Chinese companies for input. And you can see on the screens there that many of these Chinese companies are already making losses. And if they have to rely more on their domestic clients instead of customers from the U.S., from Europe, for example, that means it's going to cut further into their margins as well because of the price war that is going on at home, the intense competition there that has already been weighing on earnings for many of these companies over the past couple of years.
All right, Bloomberg's China correspondent Min Lo there. Turning to some other geopolitical stories that we're tracking today, Donald Trump has lost a bid to throw out his conviction in the New York hush money case on presidential immunity grounds. The New York state government rejected Trump's argument that his trial was tainted by witness testimony. He was found guilty in May of falsifying business records. However, it's not certain that the case will proceed to sentencing as the president-elect continues to challenge the verdict. And incoming US President Trump says he'll move to fire US federal workers who don't come back to the office. Trump says he'll go to court to challenge a Biden administration labor contract that locked in remote work arrangements for thousands of employees. He calls the deal ridiculous, saying it was a gift to a union. Donald Trump says he'll also look at whether to stop the looming US ban on TikTok before meeting with the platform's CEO at his Mar-a-Lago residence. Trump told reporters that he has a warm spot in his heart for the Chinese-owned video-sharing app, which he says helped Republicans gain among young voters. TikTok's parent company ByteDance has now formally asked the US Supreme Court to block the ban, which is due to come into force on January the 19th. More ahead on the Asia trade. This is Bloomberg. New Zealand's government is facing deeper budget deficits and a delayed return to surplus as a prolonged economic downturn and poor productivity hit tax revenue. Bloomberg Asia Pacific economy reporter Swati Pandey joins us now for more. Swati, we were expecting bad numbers. We got bad numbers. Tell us about it.
Yes. So New Zealand's economy has been in the doldrums for quite some time, largely because of the Reserve Bank's tight monetary policy. The return to surplus has been delayed now to 2029. Unlike in Australia, New Zealand's government has been cutting down on costs quite drastically. They got rid of a lot of public sector jobs as well. So they are kind of trying to trim their books and return their book to balance after the huge spending that happened during the COVID era. But it looks like it's just going to be a longer road to that, and the slowdown and recession in their economy is not helping. So that is a problem for the government and the finance minister as well, and we saw that in their update.
So we appear to be heading to a triple dip recession in New Zealand. CPI appears to be under control as well. What's the role for the RBNZ here?
Yes, so look, Bloomberg Economics does a monthly indicator now. So the official inflation report that comes from New Zealand is quarterly, but we are doing a monthly indicator, which is pointing to weakness in price pressure, much weaker than the RBNZ has projected. And that means that inflation in the fourth quarter will be weaker than what the broader expectation is, and probably below what RBNZ is projecting. And that could mean steeper rate cuts. And the RBNZ has said that now that inflation is coming down and economy is so slow and in recession, they will definitely have to expedite their monetary easing.
All right, Bloomberg Asia Pacific economy reporter Swati Pandey there. Let's take a look at how markets are tracking around the Asia Pacific today. It's a bit of a mixed bag, it appears, at the moment. We've got the Nikkei performing pretty well in Japan ahead of the BOJ decision, better by about 2/3 of 1% there. South Korea's Kospi, though, giving up a lot of the gains that we've seen. Well, we did okay yesterday in the morning session before closing lower, and it's losing quite a bit of ground today. The Kospi off by about 0.75 of 1%. Had some more news out of South Korea as well. Impeached President Yoon has been told to submit written answers to questions by a Korea court by December the 23rd. The prosecutor is understood to be planning to issue another summons for the impeached president because he didn't accept the first one. There'll also be a meeting in South Korea today between the finance minister, Bank of Korea and regulators, obviously, to try and make markets there a little bit more relaxed. Take a look at the yen, though. 154.21 continuing to weaken. That's Bloomberg's question of the day, in fact. Is it going to hit 170 before it hits at 140? That's something for you to ponder. We've got more ahead on the Asia Trade. This is Bloomberg. Let's take a look at how we're tracking on markets, but before that we'll get to the non-oil domestic exports out of Singapore. This is breaking data just hitting the terminal now. We've got non-oil exports rising 14.7% month on month. That's much better than the expected 9.2%. That's a 3.4% figure on year, reversing well, much better than the expected 1% contraction. If we break down some of these numbers, shipments of electronics performing particularly strongly, better by more than 23%. Pharmaceuticals, though, contracting quite sharply by 63%. Petrochemicals also contracting by 5.3%. So the non-oil domestic exports overall out of Singapore rising 14%. on-month in November, and that was a beat. All right, now let's get to how markets are tracking at the moment. Somewhat of a mixed bag. We've got the Nikkei doing better. We've got the yen also continuing to weaken, 154.29. But look at the euro, that's gaining, even though we've had a bit of upheaval in Europe. Of course, Olaf Scholz, all the pieces in place now for an early election on February 23. No guarantees, of course, that the political picture is going to be any clearer or more stable after that. Also, we did have Marine Le Pen, the leader of the far-right National Rally, meeting with the new French Prime Minister Francois Bayrou. Marine Le Pen saying she felt listened to during their discussion. She still doesn't seem to have a tremendous amount of confidence that she was actually heard, though, and there's going to be much movement on the budget. Chinese yuan, meanwhile, 729.27. Well, weakness in Asian currencies is bringing some key levels into view as traders brace for further dollar gains under a second Trump administration. For more, let's bring in Bloomberg's emerging markets macro strategist Marcus Wong. So, Marcus, hedge funds are ramping up their long dollar positions to the highest now since May. So what are some of the key levels that we're on the lookout for?
Yes, I think, with the way the dollar has been gaining, of course, we've seen Asian currencies weaken by quite a bit. Especially, let's look at the yuan, for example. So 7.2 fix has been a key level that the PBOC has been defending since the US election. And we think this is a line in the sand that should be held up to the point where we see US tariffs being imposed. So, of course, as a result of that, we've seen, the gap between the fix as well as the survey estimates has widened to as much as close to near 1,000 pips, suggesting that traders are essentially seeing much weakness in the yuan moving forward. Of course, if the PBOC ultimately decides to weaken the fix, and this is something that a lot of people in the street expect. When Trump comes in and tariffs are imposed, we can actually see the onshore dollar, the dollar yuan actually see the next key level of 7.3, and after that the 7.35 would be the next resistance level. If we swing now to the Korean won, for example, I think the dollar won at 1.444 continues to be a key resistance level, and this was the high seen post the imposition of martial law. Since then, of course, we've seen the BOK come out to say that they are supporting the currency. And we expect them to continue to intervene to push back against won weakness, especially if the weakness in the won results from domestic issues. For example, let's say the impeachment of Yoon doesn't go, it fails for whatever reason, or constitutional court pushes back against it, or if you see a rating downgrade because you actually see the BOK actually supporting the won as a result. But of course, if the weakness is resulting from tariffs, for example, we could see the BOK being less, strident against its intervention. If we move to the rupee, for example, the rupee is close to its, it continues to meet its record lows. And is making a headway towards the 85 per dollar level. Of course, the RBI has been intervening, supporting, pushing back against rupee weakness. But of course, they have to be balancing against draining its forward reserves as well as forward books. So all in all, the key event to watch, of course, on a macro basis would be the Fed decision this week. While 25 basis points is largely priced in and investors expect a cut from the Fed, what will be focused on by investors out there will be the dot plot, essentially.
Yeah, let's take a look at some of these central bank meetings that we have this week. A number of central banks meeting. It's not just the BOJ, it's also Indonesia, the Philippines, Taiwan as well. How do you see weakening pressure on Asian currencies weighing on the decision of policymakers?
Yeah, I think it's definitely a busy week. You could say the final busy week for markets, globally as well, of course, as in Asia. I think what we want to take a step back. If you look at the Bank of Korea meeting, the most recent one, that was just slightly before the imposition of martial law, BOK actually cut rates against you could say, widely held expectations for whole. I guess many investors out there were expecting, BOK to be more concerned over potential won weakness, but it seemed that their concerns were more towards growth. And I think this is the pervasive view that a lot of Asian policymakers will have to balance, currency weakness against concerns over growth. So for Bank Indonesia, it's actually a very interesting example. You could say they are the ones that are most concerned over currency weakness. They are the ones that have, currency stability as part of their mandate in their bank, central bank mandate. But even then, there is, even though, the majority of economists going in expect Bank Indonesia to actually hold rates, but there is a sizable minority that actually expects BI to cut rates regardless. And the same it goes also for the BSP. BSP is expected to cut rates as a result. So I think a lot of policymakers in this region they're balancing. There is consideration, right, that even though their currencies have weakened in December, weakened in November, but if they don't cut rates now, there's a chance that when Trump takes over in January, or if tariffs are imposed early on in his administration, as is what is expected by many in the market, the window, essentially there's not much of a window to ease rates. So, that's why some, people in the street are expecting policymakers to actually go ahead right now, instead of bite the bullet, even though it might lead to some weakening their currencies, and to actually ease rates as a result. So it's really a tug of war for many of policymakers out there, but it is a really a close balancing act that they will have to play in the coming months.
Let's talk a little bit more specifically about dollar yen, because of course we are expecting the Fed to ease, although a number of people are calling this a hawkish cut. Meanwhile, the BOJ is seen staying on hold, more of a dovish move. But if we take a look at the yen, it just keeps on softening, and that's the question of the day today, in fact. Does it reach 140 first or 170? I mean, what's the path of least resistance here?
Yeah, so I mean, it's fair to say that most people expect either BOJ to either move in December or January. You rightly point out that I think as of right now, most of economists expect them to hold in December. But of course, there are also expectations that they will create even if they hold in December, they would signal the correct signals that they will probably cut in January. I think the BOJ is very cognizant that they don't want to make a repeat of July. That signaling is very important. And I think so far, what we've seen from rhetoric from central bank officials, including U.A. is that they'll likely hold in December. But you're right to say that the yen has been weakening, and I think a lot of it is due to the U.S.-Japan rate differentials. While Japan may continue to hike, most people expect a gradual normalization. As a result of that, the yen will continue to be, a victim, or rather be beholden to how treasuries move going forward. And I think, of course, the view is if, yes, the Fed will cut. And of course, the dot plots will be very important on what goes next. But of course, if you expect, when Trump comes in, there's a strong inflation trade comes back into play. Populist policies, the tax cuts and so forth are announced, and we could see a jump again and a rise in treasury yields. We of course possibly could see a dollar yen weakness, essentially even, so that could be the argument for dollar yen heading towards 170. I think the hitting 170 may not be definitely not a consensus call at this point in time, but could see the dollar yen heading to that direction. Of course, if the BOJ surprises on the hawkish side, wage growth continues to build up firmly, and treasury yields actually go down as a result. And that's a view by some investors out there, is that Fed rate cuts continue to at a decent pace. Treasury yields come down as a result. Then we could see the dollar yen heading towards 140, as you mentioned earlier.
All right, emerging markets macro strategist Marcus Wong there. Well, the heads of BlackRock Investment Institute says big forces are at play transforming the global economy. Jean Boivin told us that investors need to look beyond macroeconomics to take advantage of AI and the energy transition.
This is not a cycle, right? So we've been spending the whole year thinking about soft or hard landing and the Fed in that context, and we're going to hear this week, of course, But we've been of the view that this is not really the right framing. This is not really about an expansion that can turn into recession. It's rather more about a transformation, big forces that are transforming the economies. And that leaves us, like, paying attention to the AI team. That's clearly like a big story. We think there's more opportunity in 2025 there to be generating returns. It's about, geopolitical fragmentation that's going to have implications, energy transition. So these are all these things that will have like profound effect across asset classes, but they're not like a cyclical story.
So when I hear transformation, when I hear AI, I think tech. And I think tech stocks in particular, but is that too narrow? Where else can you broaden that to?
Well, it starts there for sure, because we're in the first phase, right, which is right now to build out this AI capabilities, these factories of intelligence. As we build that out, we need to build it out first before we really get the application. So during the course of 2025, I guess that's going to evolve towards the applications, the phase 2, and trying to get more visibility on where we're going to see the big benefits and the revenue streams out of this. And I think that's where like the active management will and the skills will matter more in 2025, whereas now it's mostly about the build out and a few companies.
If you believe in the benefit here, the heft of a few companies, and if you think about the AI promise that many investors have been betting on through the course of this year, what do you then tell investors, Jean, of the people who are betting on the broadening trade? Do you believe in it?
Let me start by saying that the concentration we've seen in the S&P 500 and the markets more generally is kind of a feature of this transformation. It's not necessarily a bug. So I guess the first thing that I would say is that like you need to be careful to be reading too much in the concentration as being a red flag. So in fact, we think it's a feature, not a bug, as I said. And eventually we think it's going to broaden out, but that might take some time. So I think like not get too nervous about the concentration is the first point, and be on the lookout for broadening out over the course of 2025. But that might not happen overnight.
The BlackRock Research and Investment Institute Global Head Jean Boivin there, speaking with Bloomberg's Katie Greifield and Sonali Barsik. Up ahead, we're joined by Robert Menzies, Institute CEO, on recent anti-Semitic attacks in Australia and what the government response has been.
I unequivocally condemn these shameful acts that are aimed at the Jewish community. We must all continue to stand together against anti-Semitism. One of the things that makes us the greatest nation on earth is that people of every faith and background have the right to feel safe and welcome. We must preserve that and defend it, and my government will.
Australian Prime Minister Anthony Albanese there, speaking after an arson attack earlier this month on a synagogue in Melbourne that police are treating as a terrorist incident. And police in Sydney have also stepped up patrols after a car was set alight last week and houses vandalised with anti-Israel graffiti. The city's east is home to one of Australia's largest Jewish communities. The federal government has set up a police task force to investigate the series of attacks. Well, our next guest believes Australia is seeing a surge in anti-Semitism and that a comment from the Prime Minister that the issue has, quote, been around for a long time was, in her view, shockingly dismissive. Joining us now is Georgina Downer, CEO of the Robert Menzies Institute at the University of Melbourne. Georgina, thanks so much for joining us. You've been writing that Australia's reputation has been tainted by anti-Semitism. How has the government's response fallen short in your view?
Well, the government's response has fallen significantly short because we see, rather than a decrease in anti-Semitic attacks over the past few months, when the government has apparently been making a lot of noise about how much it condemns it, we've seen a huge increase. We've seen a Member of Parliament's office attacked here in Melbourne. Obviously, as you mentioned, we've seen the Adass Israel synagogue last week week firebombed, and 2 people almost lost their lives in that incident. Cars have been torched. We've had a lot of intimidation at university campuses. I'm based at the University of Melbourne, and we've had significant attacks against individuals, verbal attacks and graffiti that is deeply anti-Semitic. There are people now who used to call Australia a safe place for Jews, saying Australia is no longer a safe place for Jews. The criticism by the Israeli government, of course, is that Australia is now not a safe place for Jews. And I find this, it's absolutely unacceptable that Australia, a country that prides itself on its multiculturalism, on its tolerance, that has been a home, a safe place for Holocaust survivors to flee to in the first half of the 20th century, has now become a place where it's dangerous if you're a Jew.
Well, the Israel-Palestine question is obviously an extremely polarising one, and it generates some emotion on both sides. And Australia is facing an election next year. To what degree do you feel the government's response has been formulated with that upcoming election in mind?
I think the government is thinking very much about the election and the electoral consequences, and that's deeply disappointing. The government should be leading Australia for the long term, not just for short-term political gain. Governments in the past in Australia have traditionally taken a positive view of the status of Israel and have been supportive of the status of Israel. But this government has taken quite a different view and has departed quite significantly from a traditional bipartisan approach. And that has been feeding a sense that Australia is not a place where Jews can call it a safe place for home. So I think there is a lot of domestic political thinking around the government's strategy here, and that sends a really, really depressing message for Jews living here.
Well, part of what catalysed this was Australia voting for the UN resolution demanding Israel end its occupation of the Palestinian territories, which was a change in stance. But it's not hard to imagine the alternative scenario where Australia didn't vote for that. We'll probably be having a different conversation on the same subject, just from a different perspective with potentially similar results. So how does the government strike the balance?
Well, the governments past have been able to strike a balance. Of course, it's right to call out breaches of international law, but it should be done in a consistent way. The government at the moment is picking out Israel for condemnation, while at the same time not picking out countries who are equally, caught up in conflicts where there would be questions of breaches of international law. So there seems to be a one-sidedness there. Also, in the past, the Australian governments of either colour, the Hawke government, the Howard government, the Rudd government, the Abbott government, these governments of different political persuasions have stood by Israel at the United Nations, and we're seeing a significant departure here. And quite frankly, this is coming from domestic political considerations rather than consideration of how can Australia contribute best to finding solutions in the Middle East, and how can Australia contribute to maintaining and at the moment really trying to do all we can to rebuild social cohesion in this country. These conflicts are incredibly difficult ones for community members who have relatives caught up in them, but we don't want to see them playing out here in Australia, damaging social cohesion. The level of anti-Semitism and anti-Semitic attacks is unprecedented in Australia. We have seen very sort of small levels of attacks in the 60s, but the fact that now we have a place of worship for Jewish people, a synagogue firebombed, we have Jewish MPs, offices attacked, we have cars torched. This is not Australia. This is not the Australia we know. It's deeply concerning, and I haven't seen the government do much when it comes to bringing together interfaith leaders, building a case for improved education and historical understanding, which is so very lacking when it comes to the context of these disputes.
All right, Georgina Downer, Chief Executive Officer at the Robert Menzies Institute. Thank you so much for joining us today. Now, we have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney. That is 8:40 a.m. in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify, or Bloomberg.com. More ahead on the Asia trade. This is Bloomberg. The latest from the corporate front, South Korea's LG Electronics is said to be thinking of increasing its Indian unit's valuation in a planned Mumbai listing to as much as $15 billion. Sources say the increase from around $13 billion follows initial feedback from analysts and investors. We're told LG plans to start the Indian unit's IPO roadshow within the next 2 months. Bloomberg has learned that CVC Capital Partners is exploring a potential purchase of Vivendi's stake in Telecom Italia. Sources say CVC is in initial talks to buy Vivendi's 24% holding in common shares of Italy's largest telco. We're also told the buyout firm may eventually seek a full takeover and try to break up the business. Right, let's check in on Bitcoin. It's had another very good day. It topped 107 for a while there. It's pulled back a little, but it's now hovering just above at $106,000. We also have MicroStrategy included in the NASDAQ today. The NASDAQ closed at a record. MicroStrategy is a Bitcoin treasury company. It offers a range of instruments offering exposure to Bitcoin. Take a look at crude prices. They're pulling back on weak China demand. China refining has dipped to its lowest in 5 months. And something we don't often look at for you, cocoa. If you like chocolate, I've got some bad news for you. It's going to get a lot more expensive. Cocoa futures keep on climbing, hitting a record high of as much as 5.5% to just a shade under $12,000 a tonne. Well, that is it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show up next. This is Bloomberg.